Hi, this is Nate Williams, and today we're talking about legal and smart tax deductions. In this episode, health savings accounts. Health savings accounts are exceptional. Now, note that in order to have a health savings account, you first need a high deductible health insurance plan or an HSA qualified plan. You can't even begin to talk about having an HSA and making contributions to it unless you have this type of health insurance plan. So before you go any further, verify what type of health insurance plan you have. And if you can, switch to a high deductible or an HSA qualified plan. Now, just so you know, the first priority when it comes to health insurance is to care for your family's health insurance needs. And so you should look over that with your spouse and determine if that type of plan would be suitable for you. The rest of this video assumes that you have this type of plan. If you have a high deductible health insurance plan or an HSA qualified plan, then in 2024, you can contribute and take a tax deduction for up to $8,300 for the year. All of this contribution of $8,300 is tax deductible at the time you make the tax deduction, not when you use the money for health insurance expenses or for medical costs, which is very important. So with an HSA, you can contribute into the HSA account, health savings account. The money spent out of the HSA for qualified medical costs are not taxable. Okay? Qualified medical costs include almost everything except for cosmetic plastic surgery. Here's the kicker though, this is really awesome. If you don't spend the money in the HSA, you can invest the money and the investment gain is tax deferred, thus making the HSA another legal tax shelter, like another retirement plan. So what is the best strategy for an HSA? We recommend, if you have a high deductible health plan or HSA qualified plan, we recommend setting up an HSA at Health Equity. You can get there at healthequity.com. We recommend, if you can, funding the maximum contribution to the HSA annually, and then ideally invest the money and do not use it for medical costs. Your HSA, like I've said, will become another retirement plan or legal tax shelter. So just to be redundant, I don't want to be misunderstood here. Having an HSA is good. This is the HSA strategy overview. Having an HSA is good. Better would be to have the HSA, fund it every year, and use the money in the account for qualified medical expenses. But the best strategy is to have an HSA, fund it each year, and invest the money and do not use the money in the HSA until you're very old. A lot of our clients have done this for many years, and several of them have well over $100,000 saved and invested in their HSA accounts, and they're not paying any taxes on the investment gain year to year, and that's pretty cool.